Have you ever seen a chart like this and had no idea how to trade it? If you answered yes, then you're not alone. Most traders have no clue how to trade in this type of situation. But what if I did something like this? What if I did that and then told you that the highest probability chances you have of winning trades is around these red lines? What if I told you that one of the biggest secrets professional traders are keeping from you is the amount we use significant and major levels of structure in our trading? And what if I told you that after this video, you would be able to plot these same exact lines on your screen and you would know how to use them in order to gain that edge over the market that you've been looking for so long? Well, that's exactly what we're going to do today. So if you're new here, make sure you click that subscribe button to be alerted about the content just like this we come out with each and every week. Make sure you click that like button to help support us here at the Trading Channel. Also, make sure to follow us on the socials. Instagram and Facebook are linked in the description below. And I'll be right back to share with you one of the biggest secrets that professional traders are keeping from you. Last week, we did some analysis on the euro dollar using the same structure, support, and resistance identification that we're going to talk through today. So what I'm going to do is play you guys a fast clip of last week's video where we were talking about the euro dollar. When we get back, we'll talk about how that played out. Not only that, when we get back, I'll share with you every aspect to creating these specific levels of structure, these specific horizontal lines to trade around that can really give you that edge that you've been looking for over the market. So let's take a look at that clip and I'll be right back. So what that means is that if this market can get back up into that level without breaking and closing, let me delete this, it's probably getting confusing, above this level, if we get back up into this zone in through here, that is a great trading opportunity for the way I trade and the rules that I have. Now, does that mean it's a great? So on the euro dollar, you can see that we actually had a zone pointed out on this currency pair at around 114.5. That's really the area we were looking for. In this zone is what we were saying we were waiting on the market to get back up to in order to give us an opportunity to go short in trend continuation on this specific currency pair. And let's look at what the market did. We literally got right there at the bottom of that zone. I think it's 7 pips away or so. So we got within 7 pips of being highly accurate in this situation. And what we're going to do is take a look at how we could have taken advantage of this on lower time frames, and we'll also directly after that I'll talk you through why this is a significant situation. So let's go down to a smaller time frame. We'll actually go all the way down to the 15-minute chart because this is where the trade actually happens. So down here on the 15-minute chart, we come up into this zone, and these zones are so powerful that at times I only look for double tops and double bottoms in these zones. And of course I have a few different significant rules that go along with those double tops and double bottoms. But right here, as you can see, the market coming up to that 114.5 area. If I grab a ruler tool, let's actually see exactly how far away we got. Yeah, we're within 7 pips of 114.5. So what we did was we came up here to this exact area we were talking about, and we got a double top. We got some RSI divergence. We had an overbought market as well, and then this market fell off pretty dramatically. Now, let's zoom back out to a daily chart and let's talk about exactly how to spot these types of zones. So the first thing we're going to do is actually draw some structure on the chart. We're going to get a completely blank chart here, or nearly blank at least, and let me show you guys what I'm talking about. Whenever it comes to major levels of structure, support, and resistance, or major levels of structure that we can trade around that can help provide us with that significant amount of accuracy, this is what we're looking for. Markets, when trending, do something like this. Let's say we're in a downtrend. We're looking for a massive break of this level of support right here. When I say a massive break, we want to see a market that does something like that. We don't want to see a market that does something like this. That would not be considered a massive break. So we want that massive break of support in a downtrend. After that massive break, we're looking for the market to come right back up to that level of support if we get that massive break. Now, what if we don't get a massive break and the situation is more like what we see in the second example over here to the right? Well, if that's the case, then the level of structure we're paying attention to is right here at previous resistance. So this is what we're looking at when it comes to the major levels of structure, support, and resistance that we can use to increase accuracy of any trading strategy. I don't care if you're trading candlestick patterns or price action patterns like double tops or double bottoms. Using this type of structure analysis on higher time frames, which is something I'm going to explain as well, is what allows you to create a more accuracy trading strategy, more accuracy trading plan, and inevitably become a more accurate trader. So this would be an example. For me personally, I trade on the 1 hour and 4 hour charts. Considering that I trade on the 1 hour and 4 hour charts, this right here signifies daily levels of structure. So what I'm doing is looking at a daily chart. What I love to see on daily charts is a market that has a significant break of support, because at that point, I know exactly what I'm doing. I'm waiting on the market to get back up to that previous level of support before this significant break, and that's where I'm looking for trading opportunities, but not on the daily time frame. Unless I get a very specific and an odd situation entry reason, then I may enter on the daily chart. But most of the time, I'm dropping down to the 4 hour chart or the 1 hour chart and looking for really specific entry reasons around these areas of structure. So that's a really fantastic situation for me when a market does something like this on a daily chart, because I already know exactly what I'm looking for, and vice versa. Just as the second example we were talking about, if a market does this and we get a slight break of this previous support level, again, the power in this is that I already know what I'm looking for as a swing trader. I'm trading on a 4 hour and a 1 hour time frame. What I'm going to be looking for in this situation where we get a very small break of this previous level of structure support is a move back up to this resistance level. This then becomes my significant level of structure that gives me a highly accurate place of placing trades. And before we move any further, let's talk about if you're a day trader. Maybe you don't swing trade on 4 hour and 1 hour charts, but maybe you trade, let's say, on the 15-minute or the 5-minute chart. If that's the case, then you would want to do this type of analysis, this preemptive analysis, to spot out these major levels of structure that you can trade around. You want to do that on a 4 hour or 1 hour chart, because that's going to be a lot more applicable to your trading time frame. If your trading time frame, again, is the 15 or 5-minute, then you want this analysis to happen on the 4 hour or 1 hour chart. So while we're here, and again, before we go any further on the training section, let's actually take a live look at this on the euro dollar. So on the euro dollar, right here, we have a market that's pushing down, right? We have exactly the situation that we looked at up above while we were just drawing it out. We have the push up. This is on a daily chart, by the way. We have the push down. Would this be considered a significant break of this level of support? Well, yes, I would consider that a significant break. After we get that significant break, what are we looking for? The market to pull back into that level of support right there. What happens? We pull back into that exact level of support. Now we'd be dropping down to lower time frames, looking for specific trading strategies. Test this for yourself. Go out in the markets, test using double tops and double bottoms in these types of areas, and you'll see that it provides a pretty accurate way of actually placing trades, and it can provide you with that edge over the market that's so hard to find in the Forex market. But as we come up, let's keep going here. We hit that significant level of structure. We then push down, the market breaks support again. Now, is this a significant break, or would this be more like example number 2 of barely breaking a support level? I would call this barely breaking the support level, right? Since we barely broke the support level, what are we looking at as our significant level of structure? The previous level of resistance. Now, pay attention to what the market does. The market pushes up, gets to that previous level of resistance, and then pushes down. So this is the power of understanding these really significant levels of structure in the market. And again, guys, we'll go through this one more time, and I'm going to take you actually to a live trade that I'm in based on this analysis. So let's go. I do believe that this trade is on the New Zealand dollar. Yes, it is. Okay, so on the daily chart here on the New Zealand dollar, what are we looking at? If we use the same exact analysis that we just talked about, this is the daily chart. On the daily chart, we're pushing up. Oh, that was a terrible line to draw. Sorry, guys. On the daily chart, we're pushing up, down, up. This is not a significant break, so we wouldn't be looking here at major structure. We would be looking down here at our red line for major structure. The market doesn't get there, so no trading opportunity then. We push down, we push up, and this big of a break, and I'm looking at the high, not the bodies of the candles, guys. So the high being all the way up here, I would count that as a significant break of the structure level. So if we break a structure level significantly on the daily chart, then what am I looking for? Well, I'm looking for a pullback into that structure level. And then what? Then I'm using the rest of my trading plan, which consists of very specific strategies I use at levels in the market just like this. So what do I do in this situation exactly? Well, the reason you see a live trade on the chart is because at this situation, I drop down to the 1 hour chart, and I'll actually make this bigger so you can see it. Let's take this off. And here at this level, any of you who are familiar with price action patterns should be able to see what I'm seeing. Here on this specific chart, at this level of structure, again, that's not all I needed. If the market just would have got down to that level of structure, I wouldn't have placed a trade randomly. I want to see a very specific strategy, whether that's price action patterns, candlestick patterns, whatever it may be. And what happened here is on the 1 hour chart, we pushed down, we got a shoulder. Now you know where this is going, right? We got the neckline, we got the head, the finishing touches of the neckline, and the shoulder. What happens then? Well, then I see a specific price action pattern actually on a lower time frame that I like to see, and I decided to enter the market because of that. I have a stop loss below the shoulder here, and I have my first target set at a 1-to-1 risk reward. My second target is going to be somewhere up here at resistance. This gives me an edge over the market. I know that I'm more likely to hit that first target than to get stopped out of this trade. Now, does that mean that it's a for sure 100% chance? No, absolutely not. I may show you this, and you may look at this specific trade after this video is over or after you watch it and see that it lost. You may see that it won. That's irrelevant. What I know is that I have an advantage over the market. I have an edge over the market, and that means that if I place a trade using this analysis over and over, that eventually I will come out on top over a large sample size. And that's what you need to do as well. Do not take the information in this video and decide to go out and start trading it on your own without ever testing it. You must test it first, ensure that it provides an edge over the market, and then decide whether or not you'd like to put it in your trading plan. Now, when it comes to rules-based strategies, if that's something you're not at all familiar with, or even if you're familiar with it, but you don't quite understand how to do it, for the next 4 days, we're going to be showing you guys a very accurate rules-based breakout strategy. Again, it's only for the next 4 days, but I wanted to release this to you for free just so you would really understand how to create a rules-based strategy. And in that video, I'm going to be breaking down an entire rules-based strategy. By the end of it, you'll have another breakout strategy you can test in the markets and decide whether or not you'd like to put in your trading plan. So go ahead and click the link in the description labeled EMACP strategy tutorial. That's the free link for this strategy. It's only up for the next 4 days. After that, this will be content that costs money. So go ahead and click the link in the description labeled EMACP strategy tutorial to get a hold of that breakout pattern strategy. I hope this video was powerful for you. I hope it helped you to understand the significance of pointing out some really significant levels of structure, right? The significance of pointing out the previous level of support or resistance, and if it's a small break of structure, the previous level of resistance if we're in a downtrend. And actually, I'm kind of rambling and I'm sorry about that, but what I'm going to do is let me go through that one more time because it was quick, it was kind of fast. Let's go through the different ways of actually spotting the structure levels. Hold on just a second. Sorry guys. So if we're trading on a 4-hour, 1 hour chart, let's say you are a swing trader, what you're going to be looking for is a market that has a significant break of support or resistance. I'm doing downtrend examples. This all applies the same in an uptrend. So in a downtrend, we're looking for the significant break of a structure support level. Then we want the market to pull back up to that support level. Directly afterwards, you want to go down to a smaller time frame, start looking for any specific strategy or entry reason that you normally trade and that you've tested through historical data. Don't just trade this. You can even look at a few examples without trading it with live money. You'll see what I'm saying, or demo trade this, but you really need to take it back through historical data and test whatever entry reason you decide to use. But at this level on lower time frames is where we're going to be looking for possible trading opportunities. Now, a second example of what we can look for is if we get a move like this and not such a significant break. Say the market barely breaks this level of support, then we're not looking back at support at that point. We're not looking at this level for trading opportunities, but this right here, this level of previous resistance becomes a major level of significant structure that we can use in order to place trades around on lower time frames. So that's the two ways we're looking at it. Again, guys, this is on a daily chart. If you are a swing trader, you're looking at this on a daily, you're trading on the 4-hour or hourly. And if you are a day trader, let's say you trade, your trading time frames are 15 or 5, then this right here would be the 4-hour or 1 hour analysis you would do. So that's the ways that we're pointing out very significant levels of structure, resistance, and support. Let me do a bullish example of this in case it's a little bit difficult for any of you to grasp. So a bullish example would look something like this. On a daily chart, we get a major level of structure that breaks, and we get a major push above that level. Then we get a pullback to that level, lower time frames looking for trading opportunities. If we get a small break of a level of resistance, that would be considered a small break right there. Then we're waiting for the market to pull back all the way to the previous level of support, and that's where we look for possible trading opportunities. Again, don't take my word for it. Go out, test it for yourself. I hope this video was valuable. It's been way too drawn out here at the end, but I just want to make sure that you really understand and grasp the concept of finding these major levels of structure in the market, major levels of structure, support and resistance, and being able to trade around them. So again, if you liked this video, make sure to hit that like button, make sure to subscribe, hit the notification bell, make sure to follow us on the socials. Links for all of that are in the description. Make sure to take advantage of this free EMACP strategy, a free breakout strategy that's completely rules-based. We are going to walk you through over the next 4 days. Take advantage of that by clicking the link in the description labeled EMACP strategy tutorial, and I will talk to you guys next time. I'm almost out of breath. Talk to you in the next video, guys.
We'll be right back.